intro. Our boy Jimmy Stray dropping a 5-piece. Today is a good day to be a member. Well, today and tomorrow. We are going to give you a glimpse, just a small glimpse of our street interview video. And then tomorrow, if you are a member, you will be the very first people that will be able to watch it in its entirety, and then it will go public on Friday. So that's how excited I am about the video. I just skipped my whole intro. Now, speaking of intros, welcome back to Sin City Crypto Live. I am one of your co-hosts, David, and today we are coming at you from here in Las Vegas, Nevada, with our daily, only on the weekdays, but sometimes we randomly stream live shows. And the way you'll know if we randomly stream is if you put the bell notifications on. Before we get into the content, quick disclaimer. Nothing that anyone, including the chat, says in this channel should be taken as financial advice. So please, as always, use Google, DuckDuckGo, Bing, and whatever other software you use or web page you use. Speaking of content today, obviously, in 30 minutes, we will see when and how much the Federal Reserve will raise interest rates. Will it be 75? Will it be 100? Will they surprise us and do 50? My bet is 100. Robin thinks we're at 75. Let us know what you think in the chat. Let's get this party started. Also, we're talking about big layoffs across some of the biggest companies in our space. And the White House, or the Congress, is looking to ban algorithmic stablecoins for 2 years. So much to talk about today. But before we talk about any of that, I'd like to introduce you to your other co-host, Big Rob. What's up?
Hola! It's your boy, Big Rob, back in the house. Welcome to Sin City Crypto. If it's your first time checking us out, we are an entertainment-focused cryptocurrency channel where we take the old, the boring, the stale information, and we package it up in a fun and sexy way. Also, here at Sin City Crypto, we don't just do live streams. We also do the deep dives. We also do Las Vegas Strip
We do
interviews.
shallow dives as well.
Shallow dives.
Yes, and synchronized diving as well.
Synchronized diving.
Yes.
Ooh, I like that. So we do have a street interview glimpse coming up today. So
Guys.
really excited about that.
Guys,
And then
this is going to be sick. I am so stoked. So Rob took this one, and after watching it, I am going to vote that Robin does the rest of the street interviews from here on out. You guys will see why. This dude is a natural. Great job, Robin. Also, I know I'm cutting into your intro here, my friend, but Big Jimmy with a $50 super chat said it's David's desk fund. Thank you so much, Jimmy. Appreciate it. We will fly you out. I'm sorry, you will fly yourself out to Vegas, and we will take this desk and we will go put some holes in it. How about that? All right? It's just for you, my friend. Do a live stream. Shoot. Crazy crypto fans shoot desks. Like, what? Anyways, Rob, sorry. I know I kind of probably threw you off a little bit. Also, Big Chili Willy with a $5 super sticker. Thank you so much. Chat starting off with their wallets open today. I like it. Are your wallets open, Robin? Are you ready to open your wallet when this Fed rate hike comes in?
well, you know, I had some Thai food last night, so other things opened in my wallet. Now,
Oh, God. Oh, God.
anyways, let's get into it. Roll call. Let's go. All right. So first in the chat, we got Brokioshi. Round of applause for Brokioshi. We got Big Spoil, Jimmy, Big Chili Willy, Why You Loud Gang, and Big Chili Willy straight came in kicking the door down with $5 before we even started. Jonathan Jasharif. We got Tox, Brokioshi, Hindi, Brian Hamilton, AZ, Tox, Crypto420. We got K Factor, Heinz Crypto. Hola! Welcome to Sin City Crypto. I think it's the first time I've seen you up in here.
Yeah.
And then we got Sir Babe, Salvatore Militiano. And then we got Jimmy's $5 gifted sub as well. Just a pat on the back for that one as well. Crit Cat's up in here, Crypto and Yogurt. Atomic Atom, and then we got let's see here, Sean Burns, 151 Crypto, and then
Hit or Miss,
George Ornelius, Hit or Miss, Big D, Big Swole,
Anime,
Dice Assault. We got JB, 7 Snipes 8. Hola! Welcome to Sin City Crypto. And I think that rounds it out.
7 snipes 8.
Buongiorno.
Yeah, it's a packed house today, man.
Pack it.
Yeah, we
Keep
got
packing it, bro. We're gonna hit 100 today. I know we are.
Are we?
I
For
know
those of
we're
you that
gonna
have
hit 100.
not been here, you're new here. There's something we like to call open the club. You know what I'm saying? Can I get some air horn up here? So basically, if you're not familiar here, when we get to 100 viewers, when we get to certain milestones, we like to open up the club, have a Vegas party,
Celebrate with our community.
and watch David's terrible dance moves, also known as dad moves.
This is true.
Then there's a couple things we do good here in Sin City. 1, cryptocurrency TV show. 2, nightclubs. What's the third one?
Street interviews.
Street interviews. That's right.
So good. So good. Look, when I can have my kids sit there and watch it and watch the whole thing and love it and ask to watch it again, man, tells you a lot, huh? All right. So I want to show a couple things I just want to talk about real quick. Now, this isn't a topic of discussion, so to say, as far as going too deep into an article or anything, but Meta and Google are cutting staff. Just don't mention layoffs. That's what it says. And if we scroll down, we can see, sorry. In response to stalling growth and intense competitions, Meta have spoken of cost-cutting, hiring freezes, and ruthless prioritization. One word the company hasn't used is layoffs. So they are cutting staff, and I don't know what this lady's doing. They are cutting staff. They are letting people go. There's in the article, it talks about how Google is essentially making some of their people apply for other jobs. And so this report, if it had come out, let's just say a week ago, and this is just me speculating, I think the chance of 100 basis point rate hike would be a little less, because if you think about the reason why the Fed has been so aggressive and not really given a crap is because the jobs market is still good. In their eyes, according to their metrics, there's still more jobs than there are people applying, which is, I guess, in their sense, a positive. If people really need to make more money because the markets are coming down, they can go and find those jobs. It's just we see a big gap with the boomer generation after COVID happened. Some of them never went back to work. They say, you know what? I enjoyed this. I'm going to retire. So they left the workforce. You also have the younger generation coming in, not taking minimum wage jobs. Their standards of how they're treated at the workplace are a lot higher. And this goes especially for something like the hospitality and restaurant industry. I mean, even some of the top restaurants here in Vegas, where you have every single celebrity chef here, and you have waiters making over $100,000 a year, busboys making over $80,000 a year, bartenders making over $100,000 a year. They are quitting their jobs and they're not applying to new ones. And so even a top restaurant on the Strip is having a hard time filling in these positions. So, but the numbers come in, P&L statements come in, and you're at a loss. Guess what? The CEO ain't taking a pay cut. Executives aren't taking a pay cut. You know who is taking a pay cut? The workers. You know who's getting laid off? The workers. So this is something to keep our eye on. When this starts to essentially snowball and you see more and more companies lay off, will that be when the Fed starts to pivot? We don't know. We'll see about that. Also, what I want to show you here is banks have closed until further notice in Lebanon. The banks literally closed until further notice. And underneath it says Bitcoin never closes. Guys, we saw what happened in China, okay, where people were not able to get money out of their own checking accounts. And guess what people did? They protested, and guess what the government did? They sent their military tanks to try to intimidate their own citizens who didn't break any laws. They just wanted to get their money out. Well, guess what? Unless you turn the internet off completely, Bitcoin will never close. The protocol will never close. And that is why so many people, the people that are so emotionally invested in cryptocurrency, are so loud spoken in that and against the traditional system, is because we see stuff like this. Lebanon, China, who's next? What's next? Canada. You had Canada, the government freezing people's accounts. That cannot happen with crypto and Bitcoin. And so that is why we're so bullish. not just for price action, not just for our portfolios, but how it can change everyday lives of people, how it can make it better, how we can break away from the broken monetary system that's in place right now today. So with that being said, Rob, I know the FOMC, so Jerome Powell has his press conference at 11:30 Pacific time. We have the rate hike supposed to be announced at 11 a.m. Pacific time, so in about 18 minutes.
We'll pull it up live as well. So for those of you that are in pins and needles waiting to find out what the what that'll look like, we'll be covering that live, and then we'll give you a reaction. So no need to go somewhere else to find that news out.
Stay, please.
So
what are your thoughts on...
Here's a quick question. Okay. You're a fan of Spider-Man, right? Huh? Okay. Just checking. All right, so...
What the hell does that mean?
$50 fund for a new desk. In their price range here. This is right in the price range. We have a Spider-Man desk for David. So
thanks, Robin.
Yeah. Well, you know, $50. We can only we're in a certain price range, and
we don't get the whole 50. We don't get the whole 50. We get 70% of it.
So I saw the Wonder Woman one for $40.
Oh, you know, I would take a Wonder Woman desk for sure. Wonder Woman's a beast.
All right, so let's get into the charts real quick. So, taking a look at Bitcoin, we are at $19,433.
That's weird.
So a little rally before the storm. Here's the thing. You know, me and David have been going back and forth on is it going to be 75 basis points or the full 1%? I'm with the general consensus, or with the masses, that it is going to be the 0.75. I think inflation is going down, maybe not quite as fast as some would hope, the Fed in particular. But with that said, there's also a couple things coming out. So it might not be so much what is the percentage, but they are also going to be talking about some other items as well. So this is to be included, the quarterly economic rate projections, and this is big. So they're going to basically lay out the roadmap on what to expect for future interest rate hikes, and if Jackson Hole's meeting where Jerome Powell was discussing the current economic situation, if that tanked the market. So this is going to be a little bit more elaborate, a little further deep dive into the Fed's role coming up in the next 2 to 3 months. So also we do have so we're off for 1 week here. So where's the bank? So we have one month off. So today we have the announcement of the federal interest rate fund rate, and then next month none. But early November, so it's still, isn't
that midterm day?
No, the midterm.
Or the week of the midterm.
Midterm is the 21st. It's the 20th something.
I thought it was the first Tuesday of November.
Is it?
I think so. I could be wrong.
I don't know.
Rocco?
I'll check it out.
So even though you don't have one in October, this is 2 days into November, so it's still kind of, I know a lot of people are like, oh, there's none in October. Well, we're at the end of September, and this is the beginning of November, so it's 1 month and a week, basically, or a week and a half.
See how they give themselves time off?
Yes. Yeah, they got to make sure they take off for Halloween. Did you like the thumbnail today, David?
It was good.
Yeah. Are you a fan of the Gladiator movie?
I am.
Yeah.
Great movie.
Yeah, it was a good movie. So we're expecting to see some big volatility. Could go to the upside. I do think they come out, if we do get the 75 basis points as expected, if that comes in and they are not, a little bit more dovish on the news on Jerome Powell's press conference, if it's not so much doom and gloom, and he starts talking about the labor force and how strong it is, and who knows. maybe we get a big rally. Possible. I think it's more likely that even with the 75 basis points, it's going to be doom and gloom here in the future, and watch out. And then I think that's going to kind of tank the markets. So.
I said, what's Bitcoin at? Up what percent? I didn't really see that.
Bitcoin's up not a full at 0.85% right now on the 24 hours.
I'm just surprised.
Taking a look at the more broader market, so a lot of green, and so you have here ApeCoin up, Celsius, Hex. There's some interesting contenders up here in the green. So
Bitcoin up 3.1%.
Is it? It says 0.9 here. Oh, this is Ethereum. This is Ethereum's price. Sorry. Yeah. So Bitcoin is up 3%. Ethereum's up 0.9. Ethereum had a big pullback. It had Ethereum price.
That's versus Ethereum. That's Bitcoin versus Ethereum.
Oh, is that what it is? Okay. So Ethereum up to 1370. I'm curious to see if we do get a price drop in Bitcoin. Where's Ethereum going to land? It did have a 13% pullback this week, so perhaps it won't fall quite as hard as Bitcoin, or maybe it'll fall harder. And then just on the weekly level, XRP up 17% here. So straight pumping.
If you got an XRP bag, put a 1 in the chat.
And then taking a look, stock markets are in the green as well. You have the NASDAQ at up 0.61 and basically kind of same across the board. So up 0.5%, a little over that. So I think they're in the kind of the same boat as Bitcoin. Everyone's just kind of waiting for the announcement.
What's the VIX? The VIX is down. Go back to your chart. Yeah, VIX is down. So
taking a look, Putin. This is the latest here. Putin's orders partial military call up, sparking protests. I know my wife's Russian. I was sitting around the table having breakfast, talking about this today, and she's talked to some of her family. And so here, I'll read the article and I'll kind of give you the vibe from at least some perspective from people that are in Russia. We have Vladimir Putin ordered partial mobilization of reservists on Wednesday, taking a risky and deeply unpopular step that follows humiliating setbacks for his troops nearly 7 months after invading Ukraine. This is the first such call-up in Russia since World War II. Kremlin has struggled to replenish its troops in Ukraine, reaching out for volunteers, with falling way short on the needs for on their quota for troops. They've taken a lot of losses, man. And at the end of the day, this is human lives, which is pretty sad. But I was discussing with my wife, and so what she was saying, and this is just from her perspective, from her fam, is that the families down there, if you had like a military exemption.
You say she still has family that lives out there?
Yeah, all her family. Okay. She doesn't have any family anywhere else but in Russia. And so her brother serves in like search and rescue kind of scenario. I don't know exactly what the title is, but kind of like the Coast Guard search and rescue. So he's now being called upon. Anybody that's in kind of like the reserves, kind of like the military reserves that we'd have here, same scenario there. And then as well, you have anybody that served any stint in time in the military. So if you did 2 years and got out or whatever it is. So basically anybody that has any kind of government, has worked any government position over the last 50 years, is now being called up. So kind of a scary setback.
Well, on top of that, Putin had a press conference today and talked about, hey, we'll if we have to, we'll use nuclear weapons. He said it's not a bluff. So.
That's
I know.
No, he didn't say that.
He said that.
He did not say nuclear weapons.
He said to protect Russia's homeland, we will use any
means
he talked about
any means necessary.
He also talked about their nuclear capabilities compared to the U.S. and how more far advanced it is, and he said they will not be afraid to use that and any other means necessary. And he said this is not a bluff. That's literally what he said at his press conference.
My understanding was,
I'm not saying he's going to do it. I'm saying.
Well, my understanding is that he was saying any means necessary, and then people overreacted with the nuclear narrative, and then he came out and was like, "Yeah, we don't plan on using nukes. That's absurd." That's what I
not from what I saw.
I'll pull it up here in a minute. So uncertainty abroad, kind of concerning, and then. What else do I got? Yeah, what's your thoughts on all this?
On what, the Russia thing?
Yeah, just kind of the global situation. You know, you got Russia. Obviously, you have a lot of, outside of, the human catastrophe that the domino effects on this.
Have you talked to your wife about what the average citizen in Russia thinks of Putin and thinks of this whole war thing? Have you asked her about that?
I don't know about average citizen. I don't know about average citizen, but like her mom thinks he's like great. And
her mom
the
does?
kind of stuff that you see on TV where it's supposed to be shared sentiment with a lot of people. But you have the ideology that America is trying to fight a war by proxy, which in all honesty, it's really not that far off. I mean, we are we're sending planes and rocket launchers and guns and ammunition, and we're pretty much fueling the war, at least on the Ukraine side, at least for their capabilities to defend themselves. And that's what Russian media is kind of portraying. And honestly, it's really not that far from the truth. But what's missed in translation in Russia, or at least from the media side, is the war a just cause? Because Russia's framing it as, hey, there's Nazis over there, and NATO's trying to the West is trying to influence Ukraine to turn on Russia through the means of NATO. So just a big mess, man. And unfortunately, it's like it's set the whole world back, man.
Yeah.
And
it doesn't look like, just when we thought it was going to end soon, doesn't seem like it. You hear rumors and reports about the people out there in Russia are getting tired of Putin and what he's doing. You also hear about some of the wealthier, more affluent individuals in Russia who are essentially creating not a coup, but like a group, I guess, to like fight him, to like not literally fight him, but to be like, hey, what are you doing? You need to step down. You need to resign, blah, blah, blah. So something that's out of our control, I don't know. But I want to get to, Robin showed Bitcoin is up, which is a little weird to me, because if you take a look at the Dixie, we've surpassed the 21-year high we made on September 7th. And we are now, the Dixie's over $111. And anytime we've seen the Dixie go up, Bitcoin and risk on assets go down. Not in this case. And if you flip over to the Bitcoin chart, we're actually forming a big green candle on Bitcoin. This is the 1 hour chart here. We did just come a break out of a bull flag. That is when you see a move to the upside followed by a downtrending channel. We did break above it. But here's the price action I'm looking for, because we haven't retested this line yet. It looked like we were going to here. We formed this shooting star at the top of this mini bull trend, uptrend here. And that usually signifies a move to the downside. So we were expecting a test of this trend line right around 18,800, but we didn't, which is weird considering, again, that the Dixie is up. What is it up? Almost 0.75%, which doesn't sound like a lot, because us in crypto, we're used to 10, 20% on the regular. But for the Dixie, that is a lot. I mean, it's not as big as this green candle, but it's still of significance. And so Bitcoin just keeps moving up. If we go down to the 30-minute time frame, just to kind of see on the more micro level, again, we've been kind of uptrending here since about 9 o'clock London time, which I'm still not good with what time that is here in the US. But I want to show an on-chain metric for Bitcoin. So this is the Bitcoin accumulation trend score. And just keep things simple. Anytime, if it's closer to 1, that means entities and institutions are buying or accumulating. And anytime the trend accumulation score is closer to 0, they are dispersing or they are distributing. And right now we're sitting at 0.29. So entities and institutions are distributing their Bitcoin versus accumulating. And that is an on-chain metric. What I want to talk about is what will happen to Bitcoin if we see a 100-point rate hike. Okay. So we will blow right through this channel and we will at minimum test 18,300 at the very minimum. We have a few things working against us. We have the Dixie going up. We have the 100 basis point rate hike coming in. You have Russian tensions. I think all of that is gonna help push the price of Bitcoin down. Now, what are some levels to look out for? If, by the way, I'm using CryptoStackers Pro, our favorite charting software to use for entry and exit points. These are real-time indicators, not lagging. I took the local high here we made on September 12th, which is right around 22,500. And if we look at some of these short margin pressure levels, you have the 3x short level coming in at 17,000 flat, which we almost wicked down to back in June, middle of June, when the interest rate hike came in at 75, the very first one we saw. The next level to watch out for is 15,100, which is a 2x short level. And doomsday scenario, you're looking at the 1x short level, 11,383. If we take the high we made, the $25,000 high we made, you can see we found support at the 3x short level at 18,900. If we dip back down to the 2x short level, you're looking at a $16,800 Bitcoin. And then again, doomsday scenario, 1x short level, 12,600. Flipping over to ETH, this is the 4-hour chart on Ethereum. We've been in this downtrending slope here. We did wick above it briefly, but we are closing down. You see a long-legged doji here forming. Now, we still have about 2 hours left for this candle to close, but this is the ultimate marker of indecision in the market, which makes sense. We don't know what the hell the Fed's going to do. So you got bulls trying to push the price up, but bears are pushing the price down, and they're kind of settling right in the middle. This is, again, something to look out for. But what I'm looking for as far as short-term price action on Ethereum is a move between this this level of support / resistance. Well, now it's resistance, and breaking above this trend line we've been in. So this little area is if you're a swing trader, this is the area you want to swing trade in. If we test the top of this here, which is 1493, let's just call it $1,500. You'd want to put a short level in and put your stop loss right above this level around 1341. Now, of course, swing trading, scalping profits, don't do it unless you're a seasoned professional. You understand how to read charts. It can be very dangerous. You can lose a lot of money, especially if you use leverage. That's all I got.
It's 11 o'clock.
It's 3/4. Okay. Robin was right. Damn it. Fed raises rates by another 3/4 of a percentage point to fight inflation. So 75 basis points it is. A little surprising. Not gonna lie. We saw the European Central Bank go from 25. They did 25, and then they bumped it up to 50 last week. So a lot of people were expecting the Fed in the US to do the same, bump it from 75 to 100. We didn't do that.
You were the only one expecting that.
That's not true. A lot of people.
You and a handful of people.
A lot of people were expecting 100. Anyways, so we should.
There was a stake that somebody has to pay.
Rocco, where should I go to dinner?
Yeah, what about? Hey, hold on. What about all the bets Robin lost that he never paid? He was supposed to come dressed up as something.
Look how mad he is. Look how mad he is.
Hey, I'm a man of my word. I will fulfill my commitments to the bets I make. You don't do that though.
Why are you over here?
You don't do that. You lost 2 bets. You have yet to pay your bet.
Okay, what are the bets we're talking about?
So the one bet, Bitcoin trading under 20K for a significant amount of time, didn't do that in the time frame. He was supposed to.
It was actually.
No, that's not true. He was supposed to come in dressed up as something.
Look how defensive he is.
I'm not defensive.
All I said was, where should I go to dinner? And you were over here.
I don't think I sounded like that.
The steak looked juicy.
Steak looked juicy. It's okay. I'm taking them somewhere where they only put barbecue sauce on everything.
Oh, man.
We're going to California Pizza Kitchen. We're ordering barbecue chicken pizzas.
Nobody's going to eat. Okay, got it.
You know what? What I would have liked to see 100 basis point rate hike just so we can kind of ease up going into the end of the year. But I assumed with core inflation moving up almost 0.5% month over month or year over year, that is literally what the Fed looks at when they talk about their baseline level of inflation being 2%. The core is what they're talking about. CPI doesn't really matter to them as much as the core does. And so when we saw that, when we saw the Eurodollar futures market move down, we saw the European Central Bank do what they did. I came to the conclusion that 100 basis points was Dave being defensive about being defensive. I came to the conclusion that 100 basis points was very, very likely. And so it wasn't. They went 75, but I think the chances of seeing another 75 in the next one are a lot higher. Obviously, that's going to depend on what the core inflation numbers come in for next month.
Did you say corn inflation?
Corn. Bitcoin. So, there you guys have it. We should say the markets rally. 75 was definitely priced in. I believe a little bit of 100 was priced in. So markets should rally. And throughout the show, for the rest of the show, we will keep an eye on that as well. So, all right. You got anything else to talk about here?
Somebody said to look at Bitcoin. There's something going on. Do you want to take a look?
Oh, Bitcoin's tanking. What the fuck?
Yeah, Bitcoin's doing the opposite of what you're saying.
Holy shit.
Opposite David Day.
Man, this candle just literally flipped from green to red.
But
oh no, the new candle just started. Yeah.
But Bitcoin is
it's literally tanking as we speak. We are tanking live.
Hey, we're taking live. Crypto. We're taking live. Dude was like, yeah, I expect it to rally.
Well, yeah, I guess it is opposite day. You know, that's why TA is not 100%. Well, look, the Dixie is at 111.50 cents. That thing is pumping. So, again, if we take a look at these levels, 18.9, which we're already there. If I take the local high here that we had, 17,000 flat, I would probably say 17.5, which was our cycle low we made back in June of this year. That is probably what I expect us to test if we continue to dip, but we'll see. A lot of volatility in the markets right now. If you take a look at what the traditional markets are doing, am I still take a look at what the traditional markets are doing? They are going down. So, I guess it wasn't priced in. Yeah, just when you thought you had the markets figured out, you don't. All right. Yeah, so there you go. I got nothing else to say on this part. Robin, anything else you want to talk
about? Not on this subject. I thought I saw some new people in here. PK, is he new? Yeah. PK, hola! Welcome, Sin City Crypto. And then taking a quick peek at, that's all I got there. Also, Ding Dong Daddy showed up.
Yeah.
Welcome back.
All right. So getting into some of the biggest news of the day. So the first thing we're going to talk about is Wintermute. So what do you know about Wintermute, Rob?
What is it?
Wintermute.
I thought you said winter meat. Like, ooh, like jerky? Freeze dried. Goodness. No, what is it? Can you
Wintermute. Yeah.
No, tell me about it.
So I'm having some issues here, but I'm just going to go ahead and read off what the article talked about. So there was a $160 million Wintermute trading hack. This happened, I believe, yesterday. Now, if you're not familiar with Wintermute, they are a London-based algorithmic trading and crypto lending firm and they were hacked for $160 million. This is all sourced from Cointelegraph. Now, you're like, who the hell's Wintermute? They were behind the 20 million Optimism token gaffe that happened. So no bueno. Also, just some background, they were created in 2017 and raised 25 million from some big VC firms, including Pantera Capital and Fidelity as well. And then now, why is this hack so important? Okay, this is not your typical bridge hack. Why is this so important? Wintermute provides liquidity to some of the largest exchanges and blockchain projects. They use diverse strategies to find a competitive advantage over regular traders, including arbitrage, derivatives, and colocation servers for high-frequency market access. And they provide market-making services, exchanges, dApps, etc. They need companies like Wintermute to ensure the success of secondary markets for users. So it's not just some coins that were locked up in a bridge that got hacked. This is liquidity that was hacked. Liquidity exchanges use to provide in the secondary market of trading and selling and buying cryptocurrency. So this wasn't a white hat hack. This is a black hat hack. And you hear the same thing we hear all the time. Oh, if you return the funds, no, this is not going to work. Could it be the Lazarus Group again from North Korea? Who knows? But Robin, we keep seeing hacks. Are you blaming it on just the people setting this up, or you just don't think there's enough experienced developers and we're still early and this is something we should expect to see?
I think the latter. So
we should expect
still
to see more of
emerging
this.
space. You know what? Even as we move forward, you're always going to have hackers. You're always going to have people taking advantage. It's always like that. I mean, the internet's always going to be full of exploits. And so cryptocurrency essentially is an internet-based protocol, right? I mean, that's what Bitcoin is.
Yeah.
And so Bitcoin does lack the complexity. So, you know, there might not be any of available or weakness points to Bitcoin because at its core value, it's just a ledger that records transactions, right?
Yeah.
I mean, there's really no smart contract incorporated there. So I don't know, man. I think it is what it is. This is a new space. It's gonna be full of scams and hackers. And will it be less in the future? I think so. But will it disappear? Hell no. So
He said hell no.
hell no.
All right. Again, money market makers liquidity, which is literally what the exchanges need to run their exchange. And this thing got hacked for $160 million. This is not good. This is something that worries me. And yeah. Anyways, let's move on.
We just want to say that we ended the pool for we did on the chat to see if Putin is bluffing or not. We have no 40%, yes 34%. I don't care 25%.
Okay.
So it's kind of split.
So people don't care?
25%, but you know, it's 40 and 34. So 40% say it's no bluffing. So I know there's still concern.
You guys are too smart. All right. Let's move on to another huge piece of news. There's a House bill that is looking to ban algorithmic stablecoins. This is sourced from Bloomberg. This bill would make it illegal to issue or create new, quote, endogenously collateralized stablecoins, algorithm stablecoins, for 2 years. There's a study mandate on Terra-like tokens from the Treasury in consultation with the Fed, the comptroller of the currency, FDIC, and the SEC. So in the bill, there's a mandate, hey, Fed, SEC, FDIC, PCP, CPT, I want all you guys to study these Terra.
Did you say PCP?
I did.
Interesting.
We want you guys to study Terra-like coins. Tell us what you find, and then we will do nothing about it. The bill would allow banks and non-banks to issue stablecoins. Now, it's important to know that non-bank stablecoin issuers approved at state level and who also register with the Fed within 180 days would be able to operate. So, what this seems like to me is this seems like the government is putting a halt on the stablecoin market because what they really want is they want the banks to issue these stablecoins. They don't want these decentralized platforms. They don't want Tether or USDC or Binance USD. They don't want them to issue these dollar-pegged stablecoins. They want the banks to do them. And what better way to wipe the slate clean is to put a ban on them. Now, this is not all stablecoins, but the next piece of news we're going to talk about will make sense as to why I say this. So, Robin, are you scared for what the stablecoin industry will look like? Because it seems like there's an all-out war being waged on stablecoins from the U.S. government.
This is scary, dude. Right? Are you? I mean, I think, okay, first you had the shutdown of Tornado Cash. Then you have Gary Gensler coming out and saying that they're going to sue Tokenmetrics founder Ian Bellina over the centralization of Ethereum nodes and calling it U.S. jurisdiction. And then on top of that, now you have this. And where does it stop, right?
That's what I'm saying, man. And
because you're basically now you're outlawing protocols. Again, we were talking about this when Tornado Cash happened, right?
Yeah.
We were like, hey, what's next? First, okay, this is a code that somebody uploaded to the internet. Wasn't illegal when it got uploaded, and it wasn't intended for malicious activity, even though you can make a case that it's perfect for it. It's just a cash mixing service or a crypto mixing service. And that's it. That's all it is. And the people that decide to use it, if anything, you use it, it's still traceable. You see the address wallets that go in. You see address wallets that come out. I mean, it might make it complicated, but at least there's some kind of trail.
Yeah.
But anyways, that aside, you have the ban of that. And then you have this, and I mean, what is next, and how far does this reach? If a chain has a stable algorithmic stablecoin, or is the whole chain going to be axed?
Well, it depends on if it's set up like Terra Luna was, or if it's
that's
right?
what I'm saying. If it's like Terra Luna, how can you ban Terra Luna and not the algorithmic stablecoin that is pegged to the other side?
Vice versa. How can you ban the stablecoin and not
exactly.
Terra Luna?
And I mean, I guess you theoretically could, but the two were tied to the hip. And so the logical conclusion in a regulator's eyes would be, hey, if you ban one, you got to ban the other side, right?
Yeah.
And if you ban the Jeb stablecoin, you got to ban Cardano, right? You ban USDD, you got to ban Tron, right? If you ban the near protocol, so you got to ban the other side, right? Now, I know that's a reach.
Yeah,
I know that's a reach. But let me ask you a question. Was it a reach for Gary Gensler to say that the Ethereum nodes are based in the U.S. and that it falls in their jurisdiction because it's a U.S.-based company?
But I thought that was a reach before he said it.
Yeah. Exactly. The level of reach is it never ceases to surprise me. So, what else we got on this?
On the docket?
Yeah, on the Fed stuff. I know we got news breaking. I think Jerome Powell is speaking in about 10 minutes or so. So
yeah, so we're actually going to cover that in our afternoon upload. So that'll come out. That'll probably come out early.
Well, we should still discuss any breaking news.
Yeah, well, this will write down. But here,
because this is very fluid. Bitcoin's under 19,000 right now. Yeah. So.
Yeah, but here's the thing. This thing is a lot. So he's actually at the press conference right now. I believe he's right now.
We'll try to pull up the live feed as well for you.
Yeah. But as far as what he said in the statement, that's going to take some time to read and digest. So
well, he'll reiterate what he said he'll reiterate what was said in the meeting, not word for word, but kind of the vibe.
Yeah. All right. We do have some other piece of news regarding stable coins. You have our friend Tether has been ordered by a judge to provide documents. This is sourced from CoinDesk. This is sourced from CoinDesk, and they have been ordered by a U.S. judge in New York to produce financial records relating to the backing of USDT as part of a lawsuit. So they want their attestation. What are you backed by? Commercial papers, gold, currencies, Bitcoin? What we want to know. And they've been ordered. It's a lawsuit. Now, this lawsuit does allege Tether conspired to issue their stablecoin as part of a campaign to inflate the price of Bitcoin. Here's what they're asking for, okay? This is what the judge is asking for. General ledgers, balance sheets, income statements, cash flow statements, profit and loss statements. They also want records of trades or transfers of crypto by Tether, including info about the timing of the trades. So they are getting so deep into the Tether cavity that they are literally saying, we need to know when, where, and how you transferred and traded crypto over the last 6 months. There is a fight on crypto. There is a fight on stable coins, and it's not good. This is not good. I mean, Tether does this every 3 months. They send out it's called an attestation of reserves. What is Tether backed by? And we've seen their commercial paper holdings, which is essentially unsecured debt, commercial debt. We've seen that number decrease exponentially over the last, I would say, 6 to 9 months, which is the biggest strife against Tether was that a lot of their dollar backing, their peg, was to extremely high risk commercial paper bonds. And so they're working on that. Every 3 months, they show you this is what it looks like. And now they've been ordered by a judge via a lawsuit to provide not only that, but we want to see income statements, cash flow, record of trades. Is this an overreach, Robin? What is the purpose behind why the government would do something like this?
I don't know, man. I'm in the same situation, bro. The same situation with the last article is that government is cracking down on crypto, right?
Yeah.
I was thinking with this Cynthia Loomis bill
that hasn't even gone to the House, man.
But I was thinking that we were making some progress. You know, it was only like 6 months ago. I was like, hey, you know, we might get this ETF. We got the Cynthia Loomis bill. El Salvador's doing its thing. Yeah, I feel like we're going backwards now. I mean, this latest one with the Tether thing by the judge really isn't that big a deal. Honestly, I think they're just looking for more transparency when it comes from Tether, and that makes sense. But you're seeing a lot of eyeballs on crypto, and so I don't know. Just it's worrisome for me.
Me too, man. And we'll see what transpires out of this. But what we need, like, enough of this. Hey, you work with this person, you work with that agency, you guys work together, and then to figure something out. That's not working. It hasn't worked. That's not going to work because everyone wants power. And Congress, House, Senate, that is literally your job, is to pass laws and regulations to disperse power amongst other parts of the government, whether it be the SEC, the CFTC, the Treasury Department, Office of the Comptroller, whatever the hell it is. Sit down, figure it out, because crypto's not going anywhere. Do you really want to be the only country that is so harsh on crypto? Miners will leave. Node operators will leave. And guess what? These node operators that are in the US and the profits they make, guess what country they pay taxes to? Yours. And it sounds like you guys are about to screw this all up. Sit down, pass something, put Gary Gensler in his place. If you're going to let him regulate a certain part of the market, fine. Put it in writing. Gary Gensler, this is your sector. This is where you're going to regulate. CFTC, this is your sector. Treasury Department, just do it. Enough of it. Like, they're passing an Inflation Reduction Act, some bullshit regulation that is supposed to bring down costs of prescription drugs that no one's complained about. That is supposed, like, what is that? It hasn't done nothing for inflation. How about you do something of value? Do something that'll bring value to people. But they keep, this is why my government pisses me off so much. It's just because they're just chasing their own tails in a circle. Who is paying us the most money lobbying, and what do they need passed?
All right.
It's frustrating. This next piece of news, I'm not sure if this is good news or bad news. Company slashes the prices of ASICs. Bitmain announced a discount on one of its flagship models from the S19 series of ASIC miners. Now, ASIC machine prices have fallen more than 60% in the past 6 months. Bitmain also said that customers that bought the S19 Pro machines, which I believe are the latest, the most up-to-date, cost-effective ASIC miners, that anyone that bought them that have scheduled deliveries in Q3, Q4 of this year would be eligible for discount coupons. So essentially, you paid full price. Now they reduce the price. They will give you a rebate. And there's companies that have bought over 10,000 units where typically they would pay $118 per terahash of power. They're now paying like 28. Over a 75% reduction in prices of ASICs. Now, you can look at it from both sides. You can say this is a good thing, this is a bad thing. What side are you taking, Rob? Is this good or bad?
Yeah, prices of ASICs are going down?
Yeah. What does that tell you about?
I think it's
not enough people
think it's
buying?
Okay, first of all, there's the ease of the supply chain. There's not quite as big a demand when it comes to computer chips. And so you got to think, man, it's all tied together. You know, the microchips that go to cars and the microchips that go to ASICs and to graphic cards, those are all intertwined. And we see Ethereum going to proof of stake and all of these graphic cards out there.
My bad.
Yeah. So, you know, speaking of which, real quick, you wanna give a preview of that video, bro?
Just intro?
Yeah, just the intro.
I can do that.
So, guys, we have the street vid here. We'll give you the sneak peek. Tomorrow we'll put it out for the members only, which is most people in here, and then from there we'll air it on Friday.
Yeah.
There you go.
So if you're a member, you will get to watch this first before anyone else can. All right. So we're just gonna show you a little glimpse. All right, just a little taste. A little taste. All right. Here you go.
My dude, you got some Bitcoin? You know about Bitcoin, negra?
A black Bitcoin.
I'm a Litecoin guy. Shout out Litecoin. Shout out my boy. Shout out my boy. Don't hide from it. It's coming. Litecoin forever. I see you.
Shiba Inu? Anybody? We are an entertainment-focused cryptocurrency channel. It did not go to zero. It's at 19,000.
All right. That's all you get. Things gonna be good, man. Be good.
Good video.
Yeah. All right. So again, if you're a member, you will get that see that full video tomorrow, and if you're not a member, you're gonna have to wait till Friday. So, back to the conversation of ASICs, right? So they're dropping their prices down. Someone said the S19J is at 3850 right now. Was 13,500 at the beginning of the year. Is it people aren't buying? Are people just unplugging the old ones and not replacing them with new ones and plugging back into the network? I don't know. Hash rate is going up. Difficulty is going up. But for a company to slash its prices by like 70 plus %, to me, immediately, it's a little it's cause for concern. So we'll see. All right. Let's take a look at let's see what the Fed's doing here. Okay. I know Jerome Powell is going to be speaking here in about 4 minutes. So we will, I don't know if we'll cover that live, but we'll definitely.
Let's cover it live, man.
Okay. So we'll wait on that. Let's take a look at what the crypto markets are doing just real quick. Pull up core market cap here. All right. So Bitcoin is back up to over 19,100. ETH sitting at 1342. If we take a look at the Bitcoin chart, let's see what happened to that nasty red candle. Still big, but you see the wick. Now, if this turns into a hammer, this would be pretty good. But it is currently being oversold. You can see here on the stochastics, we are close to that 20. Anything under 20, we're considered oversold. And just take a look at what the traditional markets are doing. See if it's still crashing. So you have, it's coming back a little bit. Dow was only down 195 points, whereas it was down, I believe, a little close to 300. So everything is back to kind of even. And so, again, after the rate hike, so the FOMC meeting is 2 days. So it was yesterday and today. They come out at the end of it today, announce a rate hike. And then about 30 minutes after the announcement, the Fed chair, Jerome Powell, does do a live press conference where he talks about what they talked about during the FOMC meeting over the 2 days, what people can expect moving forward. And this is where the markets react the most. Is, all right, we got the 75. We want to, and they listen carefully to every single word this man says, because if they get the slightest hint that they might reverse course, you will see the markets pump. If you get the slightest hint that no, we are going to keep at this, nothing is changing through the end of the year, I believe the markets will continue to go down. But I have been wrong. Just today, I've been wrong a couple times. So we'll see. FOMC got 36,000 people watching on YouTube. A lot of people. That's why people aren't watching the Sin City Crypto. I don't know, Robin, what else you got?
Not much. I'm just refreshing the CNBC, or actually I'm on pbs.org right now.
See when the is going live?
Yeah, I have the feed pulled up. Here, I'll drop the link. Oh, there he goes. He's live.
He's live? All right, let's swap over.
I don't have audio. You got to put it up in yours.
Okay. All right. Fix the audio. What is it? Where am I going?
Just type in Jerome Powell in Google. It'll be at the top.
So you think there's a good opportunity now to go ahead and buy, trade something shorts? What do you think is a move for somebody that want to make, a move right now, or just wait for everything to settle down?
I think the best thing to do is to wait. You don't know what the hell. At least wait till you see what he says. All right, my friends, and we are live. Full screen is unavailable. Great.
Try to find the right link. There we go.
Good afternoon. My colleagues and I are strongly committed to bringing inflation back down to our 2% goal. We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised its policy interest rate by 0.75 percentage point, and we anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we are continuing the process of significantly reducing the size of our balance sheet. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed from the historically high growth rates of 2021, which reflected the reopening of the economy following the pandemic recession.
And printing.
Recent indicators point to modest growth of spending and production. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, in large part reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment, while weaker economic growth abroad is restraining exports. As shown in our summary of economic projections, since June, FOMC participants have marked down their projections for economic activity, with the median projection for real GDP growth standing at just 0.2% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. Despite the slowdown in growth, the labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies near historical highs, and wage growth elevated. Job gains have been robust, with employment rising by an average of 378,000 jobs per month over the last 3 months.
That's going to change.
The labor market continues to be out of balance, with demand for workers substantially exceeding the supply of available workers. The labor force participation rate showed a welcome uptick in August, but has little changed since the beginning of the year. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing the upward pressure on wages and prices. The median projection in the SEP for the unemployment rate rises to 4.4% at the end of next year, a half percentage point higher than in the June projections. Over the next 3 years, the median unemployment rate runs above the median estimate of its longer-run normal level. Inflation remains well above our 2% longer-run goal. Over the 12 months ending in July, total PCE prices rose 6.3%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In August, the 12-month change in the consumer price index was 8.3%, and the change in the core CPI was 6.3%. Price pressures remain evident across a broad range of goods and services. Although gasoline prices have turned down in recent months, they remain well above year-earlier levels, in part reflecting Russia's war against Ukraine, which has boosted prices for energy and food and has created additional upward pressure on inflation. The median projection in the SEP for total PCE inflation is 5.4% this year and falls to 2.8% next year, 2.3% in 2024, and 2% in 2025. Participants continue to see risks to inflation as weighted to the upside. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 percentage point, bringing the target range to 3 to 3.25%. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy.
They are so far behind on that.
Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate, The pace of those increases will continue to depend on the incoming data and the evolving outlook for the economy. With today's action, we have raised interest rates by 3 percentage points this year. At some point, as the stance of monetary policy tightens further, it will become appropriate to slow the pace of increases while we assess how our cumulative policy adjustments are affecting the economy.
There it is. Markets are going to pump.
We'll continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 4.4% at the end of this year, 1 percentage point higher than projected in June. The median projection rises to 4.6% at the end of next year and declines to 2.9% by the end of 2025, still above the median estimate of its longer-run value.
Basically another 1.5.
Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty.
Sounds like
where
they're
the
staying the course at 0.75. He also referenced
we are taking
2%
forceful and
as a
rapid
target,
steps to
way
moderate
far away from
demand
it,
so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth, and there will very likely be some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. We will keep at it until we're confident the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
No, you don't. He's going to get ripped.
All right.
No, this is the best part, bro.
Hi, Chair Powell. Thank you for taking our question. Gina Smiley from the New York Times. I wonder if you could give us a little detail around how you'll know when to slow down these rate increases and how you'll eventually know when to stop.
So I will answer your question directly, but I want to start here today by saying that my main message has not changed at all since Jackson Hole. The FOMC is strongly resolved to bring inflation down to 2%. And we will keep at it until the job is done. So the way we're thinking about this is the overarching focus of the committee is getting inflation back down to 2%. To accomplish that, we think we'll need to do two things in particular to achieve a period of growth below trend and also some softening in labor market conditions to foster a better balance between demand and supply in the labor market. So on the first, committee's forecasts and those of most outside forecasters do show growth running below its longer-run potential this year and next year. On the second, though, so far there's only modest evidence that the labor market is cooling off. Job openings are down a bit. As you know, quits are off their all-time highs. There's some signs that some wage measures may be flattening out but not moving up. Payroll gains have moderated, but not much. And in light of the high inflation we're seeing, we think we'll need to, and in light of what I just said, we think that we'll need to bring our funds rate to a restrictive level and to keep it there for some time. So what will we be looking at, I guess, is your question. So we'll be looking at a few things. First, we'll want to see growth continuing to run below trend. We'll want to see movements in the labor market showing a return to a better balance between supply and demand. And ultimately, we'll want to see clear evidence that inflation is moving back down to 2%. So that's what we'll be looking for.
It'll take a long time.
In terms of reducing rates, I think we'd want to be very confident that inflation is moving back down to 2% before we would consider that.
Steve.
Okay.
Thank you, Mr. Chairman. Steve Leisman, CNBC. Can you talk about how you factor in the variable lags on inflation and the extent to which the outlook for rates should be seen as linear in the sense that you keep raising rates, or can you envision a time when there's a pause to kind of look at what has been wrought in the economy? from the rate increases? Thank you.
Curious to see how he answers this one.
Sure. So, of course, monetary policy does famously work with long and variable lags. The way I think of it is our policy decisions affect financial conditions immediately. In fact, financial conditions have usually been affected well before we actually announce our decisions. Then changes in financial conditions begin to affect economic activity fairly quickly, within a few months. But it's likely to take some time to see the full effects of changing financial conditions on inflation. So we are very much mindful for that. And that's why I noted in my opening remarks that at some point, as the stance of policy tightens further, it will become appropriate to slow the pace of rate hikes while we assess how our cumulative policy adjustments are affecting the economy and inflation. So that's how we think about that. Your second question, sorry, was?
Is there a point in time you can see pausing? Is it linear that you keep raising rates, or is there? Oh, I'm sorry. I should know better than to not talk with my microphone.
I should know better than to answer your second question.
Oh, there you go. Is it linear? Do you keep raising rates, or is there a pause that you could envision where you kind of figure out what has happened to the economy and give time to catch up in the real economy, the rate increase time to catch up in the real economy? Thank you.
So I think it's very hard to say with precise certainty the way this is going to unfold. As I mentioned, what we think we need to do and should do is to move our policy rate to a restrictive level that's restrictive enough to bring inflation down to 2%, where we have confidence of that. And what you see in the SEP numbers is people's views as of today, as of this meeting, as to the kind of levels that will be appropriate. Now, those will evolve over time, and I think we'll just have to see how that goes. There is a possibility, certainly, that we would go to a certain level that we're confident in and stay there for a time. But we're not at that level. Clearly today we've just moved, I think, probably into the very lowest.
We'll probably we will probably watch this in its entirety from beginning to end, and we'll come out with our gathered thoughts, kind of what we think about what's going on. But looks like 4.4? So let's call it 4.5. And right now, the 75 rate hike brought us to 3 to 3.25 or 3.25 to 3.5?
3 to 3.25.
3 to 2.25. So you're looking at another 150 basis point.
Yeah, which lines up exactly with projections. So you have the next meeting in, was it November and then December?
Yeah.
And then that'll 275 basis points puts it right on track for that. What they'll do in January follow up, that's the big question. So.
I think, and this is just me speculating, of course, there's no research done into this, just based off everything I've heard and seen. I think we'll I don't know if we'll see 75 November, December, but I think we will see rate hikes in November, in December, at least to 4%. So at least another 0.75 to 1, at least. And then I think at the beginning of 2023, they're going to stop. They're going to stop. And I think that could last the entire first quarter of 2023. They're going to stop. They're going to say, all right, we've been hiking rates since March of last year. Every single month we've been hiking rates. Let's see this thing play out. Maybe they'll focus more on shedding some off their balance sheet, which, by the way, they are so far behind. They were supposed to shed $45 billion a month for 3 months. You want to know how much they shed in those 3 months? $30 billion total. And that number was supposed to jump to $90 billion in September, October, November. I highly doubt we're going to see that. If they ratchet it up from essentially $10 billion a month to $90 billion a month in September, October, November, the markets are the mortgage market will freaking, I'm telling you, there's over $2.5 trillion in mortgage-backed securities that the federal government, the Federal Reserve, is holding on their balance sheets. And that is like, and this number is going to be off, but around 60 to 70% of what their balance sheet is. If they start offloading those, the mortgage industry is gonna absolutely tank. A lot remains to be seen, but we do have this midterm election coming up. But it's also important to note that the Fed operates completely separately from Congress, from the White House, from even the president. So they have no say in what the Fed does. The Fed essentially does their own thing, but obviously they want to keep their bosses happy. I don't know. What do you think, Robin? You think what I said as far as rate hike coming into 2023, nothing happens for a couple months at least. They see what's taking place, how it's circling into the system.
Yeah, I mean, I've been saying that for the last couple months. 75 basis points all the way throughout. And I thought this month and the following month and the following one. So, right on track for what I was expecting. The markets are super volatile right now. I'm curious to see where they're going to end up landing. NASDAQ was up to 1.5% up in the green, down from, or up from, which reversed from being down a full percent. So 2% swing there in 20 minutes. And so Bitcoin is kind of flipping around as well. So
that entire, look at this, that entire candle has been wiped out. We might even see green here. We're at 19,600 on Bitcoin.
Yeah, we're about to see green. I'm sure we'll probably get to at least 19.9 at this point. I mean, it looks like that's the direction.
Yeah. If you take a look at the rest of the crypto markets, let's see what's pumping. Over the last hour, XRP has pumped 7%. Over the last hour, let's see what the biggest gainers are here for cryptocurrency. Why is this not a order? Okay. Anyways, XRP up 7.8%. I think as far as the biggest one, that and Chili's. Chili's is up as well. Stellar Lumen's up almost 0.5%. Clayton. So, yeah. Just interesting to see how quick the markets react. I mean, literally, we watched Bitcoin about to fall off the face of the earth, and now it's back above. It's essentially pierced this candle here, which is typically a positive sign. So.
And then once the big media analysts get in and break down the speech and microanalyze every word that he says and then take it out of context, or not that it's taken out of context, but
it'll be taken
really overstress the particular sentences that he says, I think we'll see more movement in the market. I feel like we're going to turn red by the end of the day. Because outside of him saying that they will ease in the future, he followed that quickly with, hey, but when we get to 2%. When we get to 2%. 2%.
Or when we're on the path to get to 2%.
Yeah. So, and he basically confirmed the 75 basis points the next couple meetings, barring a sharp drop in inflation in the meantime. So, yeah. Not surprising.
Dixie has come down a little bit. It's sitting at $110.88, so that's come down, but we should expect to see that go up over the next couple of days.
All right, well, all we got.
That's all we got. Rocco?
Finger tornado.
Roll the outro. Friends, family, friends of family, and family of friends, we thank you so much for joining us on this Wednesday here at Sin City Crypto. Make sure to come back tomorrow at 10:30 a.m. Las Vegas Pacific Standard Time for our daily live show. On behalf of myself, Robin, and the Don, we love you guys. We'll see you tomorrow. Take care.
Sleepy.